Of the market. Gurmeet, first tell us, is there any respite from the heat wave in Delhi? Is it a little bit better at least?
Yeah, it's a bit better. It actually rained Sunday as well as Friday, but still upwards of 40 degrees peak hours, but much better than 47, 48 degrees. Yeah.
Relatively better. Let's use that terminology. But relatively better for the market as well. I mean, while it's been a week of consolidation that we've come out of, but we managed to do okay at an index level, individual stock level as well. Banks come back to the fore. What's it looking like for the next 1 month or so?
Yeah, so I think the market is trying to position itself basically pre budget, and I think they are trying to. So I think the housing finance names have gone up. There's an expectation that the government would put more incentives in place for rural and semi-urban housing. I think the agri focus names are back in focus, considering that the MSP jump has been quite significant in most crops, almost 14 crops. There's been a 40-50% upward revision in the MSP, which are the Kharif crops. Also, there's some bit of focus on consumption, with some respite expected for the middle class, and I hope it goes through in terms of taxation. So I think the market is trying to position that. But to be honest, I think there are very few pockets which give you a lot of valuation comfort. So you got to be very selective in terms of what you buy, and ensure you don't end up paying very unreasonable valuations in those pockets.
Point taken. But all of this and the kind of order books these companies have, would you make a fresh bet in any of the infra names? And if yes, which are those names?
So we are a little selective in infra names, largely because of past record on governance, and their inability to manage the commodity prices and the working capital cycle. So we are selective. We continue to be with the bellwethers, names like L&Ts of the world. A subset of that is logistics, which I think is not well represented in the index, and I think that that could see a lot of traction. So we have Concor, we have Gateway, we have some of the names in logistics in our radar. We have a very specialized name which is related to auto logistics, which is TVS Supply Chain Solutions. They came up with an IPO after a very long time, and they've guided for almost 300-400 crore PAT over the next 2-3 years. Currently at about 7,000 crore market cap. So we like this name. It's a specialized niche auto logistics name which we like. And so we are playing at that. But as I said, in some cases, just because of the order book, just because of the government policies, the prices have run up quite significantly. And a lot of these EPC names are at 30, 40, 50 times EV by EBITDA. Last time this happened was 2003 to 7. And we all know what happened in subsequent 5-10 years. The returns were very subdued.
These circulars and all of these issues coming up, there would be that narrowing of that discount and a better price discovery?
Oh, 100%. And I think it's an interesting development, as Sharad pointed out. So we are also trying to evaluate. We have one company in our universe. This is Bajaj Holdings, where we think there could be some value in locking the hood discount excess of 50% in some of those cases. So we have some of those names in our name. We had one TVS Holdings, which we made good money, but that was a special situation because the company got split into three, which was Sundaram Clayton, TVS Holding, and the preference share. And it panned out beautifully for us for last 1 year. So we currently have exposure just to TVS Holdings and Bajaj Holdings. We'll study this in great detail and figure out if we can add more and look at something like Maharashtra Scooters also, even something like ITC for that matter.
Allied, breweries as well, that comes out with its IPO tomorrow. Seems like that this entire space is also seeing a lot of traction from investors and the users alike.
No, I think the traction for the users was always there. I think it's basically the investors, because of as you rightly said, the policy uncertainty. So I think United Spirits is worth the look post the management change. Another one is United Breweries. I think Vivek has joined from PNG Australia. So they have a great leadership team, board as well. and I think he was supposed to join PNG Global, but had to come to India due to personal requirements, and then has not taken over United Breweries. So, and I'm a great believer once a good leader comes in, especially in the consumer facing industry, it creates a lot of difference. We've seen that with so many names, including let's say Tata Consumer, Varun Beverage. So I think that's something we are tracking. And that's something where probably in United Breweries, probably the policy uncertainty would be in terms of relative impact could be slightly lesser.
Okay, point taken. In the meantime, let me finance bank, your micro lenders, MFI please, etc. Call it the kind of commentary coming in from Ujjivan or the fact that this entire chatter around loan waiver has started again. How should one approach this segment? Is this dip a buying opportunity, or is this the time to take some profits off the table?
No, I think the sector would come under pressure, especially after the Ujjivan commentary and lowering the guidance. But I think there will be differentiation, and there's somebody like, for example, a Credit Access Grameen, which is amongst the largest in this space. I think it's done phenomenally well over periods. We haven't they have understood various stress tests, including the COVID ones, and I think even the regulator has been very proactive in identifying stress in unsecured loans in different pockets of lending, and we have seen regulatory action. So I think management proactively doing more provisioning is actually positive in my view for the sector, from the health of the sector from the long term. And we should not probably try and color everything in the same brush. But as I said, relatively right now, the home finance companies make more sense with the focus government has. Even some of the niche NBFCs names like Ugro, which are again focused more on MSME lending, they maintain credit costs. The yield band is more 14 to 18% and not 30-40%, which where MFIs operate. And also some NBFCs which have been a little out of favor, like Bajaj Finance, like Cholas of the world, and even now Shriram and L&T Finance. So I think some of the NBFCs will make a comeback as cost of funds, in my view, will come off over a period of time. It will be slow and gradual, but as cost of funds come off, I think some of the NBFCs will get back in focus.
Point taken. So those are some of the recommendations from the MFI space and how you should approach it. But definitely watch.
If you like this video, then like, share and subscribe to ET Now.